In my videos, I talk about using option trading as a way to generate income. In this video, I'm going to specifically show you one method I use for selling covered calls in order to make a monthly income. Let's begin by using my shares of Occugen to sell a covered call. So I submitted this sell order on June 2nd, and in my analysis, I wanted to use the $8.50 strike price with an expiration date of June 18th of 2021. For this first time through, I'll walk you through the process, and that way you'll be able to see which buttons I push and how I submit my order. Okay, let's get started. I've got my trading application open, and so the first thing I'm going to do to start trading is press the trade button, then trade options, and now I'm going to select the expiration date of June 18th. So for this trade, I'm setting up to sell a covered call, and then I'll be selecting the $8.50 strike price, which at the time of this recording was paying $1.14 per share in premium. I have 100 shares available, so I'm going to specify one contract. And for my limit price, or the premium that I'd like to receive, I'm going to specify $1.15 per share. Now let's take a look at the summary and review this order. So for this covered call, I'm agreeing to sell 100 shares of symbol OCGN at $8.50 per share on or before June 18th. And so you can see my 100 shares are being reserved as collateral to cover this covered call. And in return for selling this covered call option contract, I'll receive $115 as the premium payment, and that'll be shown as a credit deposited immediately to my trading account after this option contract gets filled. It looks good, so I submit my order, it gets received and placed in the open market available for any interested buyers. A buyer eventually purchased my option contract. Let's take a look. I opened my account history, and we're taking a look at the transaction where my covered call transaction actually was purchased and filled. I'll walk you through the key points of this transaction so that you'll have a good understanding of what transpired. So for this transaction, I'm selling a covered call for stock symbol OCGN with a strike price of $8.50 and an expiration date of 6/18/2021 or June 18th. So I submitted this order on June 2nd. And this order was actually filled later that morning at 11:28 a.m. Pacific time. Now when this order got filled, in other words, when a buyer purchased this option contract, they paid $1.15 per share. Now, as a part of that transaction, I received $115 as the premium payment, which showed up as a credit deposited immediately to my trading account. With my order submitted, now let's jump forward to June 18th of 2021, the expiration date. Here's the daily chart for Occugen. Let's pay attention to the expiration date of June 18th of 2021. And just as a quick reminder, the strike price for the covered call that I sold was $8.50. So on the expiration date, June 18th, this stock closed at $6.57, which is way below my strike price. So it finished out of the money and the option contract expired worthless. Now let's take a look at this transaction and run through the numbers. So for this first covered call, I sold the call option on June 2nd, and I had selected the June 18th expiration date, so that made the length of this option contract 16 days. Now for this option contract, I used the $8.50 strike price, and I was paid $1.15 per share when this option contract got filled, and so that meant that I received a total premium payment of $115, and that was deposited to my trading account. Now on the expiration date, again that's June 18th, this option expired worthless. Remember, I showed you that the market price finished below my strike price, and so the terms and conditions of the contract weren't met. So, the option finished out of the money, which means that the option contract expired worthless. And so as a result, the shares that I had reserved as my collateral were released back to me, so I got to keep my shares. And I also was able to keep the $115 of premium that I received. So for me, this was a successful option trade. I sold a covered call, and my shares were tied up for the 16-day duration of the option contract, being used as collateral. But at the end, on the expiration date, my shares were released and returned back to me, so I got to keep my shares, and I walked away with $115 of profit. Now, because my shares were released back to me and I retained ownership of those shares, I decided to sell another covered call using those same shares. I finally did it. I took the information and experience that I shared in my 150 videos from my YouTube channel and created a course to help people sell their first covered call. You can get free access to my course by visiting my website, coveredcallincomegeneration.com. Okay, now it's time to utilize the same shares and sell another covered call. Okay, I'm going to save a little bit of time and not bore you with all the button pushing and just show you the trade confirmation. So here's where I submitted my order. I'm selling a covered call for stock symbol OCGN with a $9 strike price and an expiration date of July 16th of 2021. So now I submitted this order on June 22nd. So that's 3 days after my first covered call expired. So I just turned around and using those same shares decided to sell another covered call. So I'm selling this covered call and it was filled on June 22nd at 12:50 p.m. Pacific time. For selling this covered call, I received 75 cents per share in premium. And when this covered call got filled, I received $75 as a credit for the premium, and that money was deposited immediately into my trading account. Now let's jump forward to July 16th of 2021 to find out what happened on the expiration date. Here's the daily chart for symbol OCGN, but let's focus on July 16th, the expiration date. And just as a quick reminder, my strike price for this covered call was $9. As we review the chart, we can see that this stock closed at $6.66 per share, which is more than $2 below my strike price, so this option finished out of the money. And as a result, this entire option contract expired worthless. And again, just because it expired worthless doesn't mean that I walked away empty-handed. So let's take a moment and review this trade. I'll use the same table as before, but now we're just going to focus on covered call number 2. I sold this second covered call on June 22nd. Now I picked an expiration date of July 16th of 2021, which made the length of this option contract 24 days. Now I chose the $9 strike price, which at the time was paying a premium of 75 cents per share. So when the buyer purchased and filled this option contract, I was paid a total premium of $75, which was deposited immediately into my trading account. Now jump forward to the expiration date, and let's take a look at the outcome. So we saw that the option expired worthless because the market price finished well below my strike price. I ended up keeping my shares. They were released and returned back to me. And I also walked away keeping the premium from this transaction. Let's take a look at my overall results from selling these two covered calls. Both option contracts that I sold expired worthless, so I still have ownership of my shares. Plus I added $190 to my account balance, and that's from the two premiums that I received, for $115 on the first option contract and $75 on the second option contract. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.